Hello traders, and welcome to another video review. Today is Monday, July 29th, 2024, the beginning of the new trading week. But in the middle of this week we will have the switch from the July to August. So we have a weekly close and monthly close coming on this week. Anyway, let's find out what's going on the economic calendar first. As you can see, the calendar is not busy at all. I have selected only the yellow and red events. So this is of course the events that are medium and very important. As you can see, we got some data from the Sweden. Then we got data at 8 o'clock from the German retail sales are expected to increase from minus 1.2% to 0%, and then we got 30 minutes later we got retail sales from the Switzerland scheduled for release. This time we got only previous reading of 0.4%. And this is it. This is how it looks like on Monday. So not really busy day with the macroeconomic data releases. So let's just switch for the charts. Let's take a look what is going on the euro dollar and the other majors. For our chart of the euro dollar is showing us a lack of volatility after we hit the level of 1.0826. Market is coming up and down, up and down, up and down in a very narrow range, just below the 50 periods moving average and just above the 100 periods moving average. This range is limited to roughly not even 20 pips. So please be very careful with the current situation, because it means that sooner or later we will have some sort of the breakout out of this range. Basically, range traders might be happy with that situation, but the momentum traders are definitely not happy with this, because the momentum is very limited. Nevertheless, all of the previous levels are still valid. We retrace a little bit more than 38% of the last swing up. Low is at 1.0826. Next target eventually for bears is 50% of the Fibonacci retracement, 1.0808. And of course this zone here, which is the key technical support zone, 1.0805, 1.0789, and that's our demand zone. As you can see, my blue arrow indicates that this zone is quite important. From the upside, we got the technical resistance at 1.0918 and the swing high at 1.0950. However, I would like to add one more level here. This level is very obvious. You can see it straight on. It's roughly around the level of 1.0872. I guess this might be the technical resistance as well. So right now this level is no longer valid because the market doesn't respect it. This level is no longer valid. Market doesn't expect this, but so let me just move this one roughly here. So that's the technical, of course, support, and this is the clearer picture. This is how the situation looks like, very tight, waiting for the breakout on the euro dollar. British pound. The British pound very similar to the euro dollar, because the volatility has been limited. We briefly traded above the 100 periods moving average, but those moving averages are coming close together, while the momentum is staying below the level of 50, which means that the bearish pressure is still quite substantial. Local low was made at the level of 1.2846, just a little bit above the 50% of the Fibonacci retracement at 1.2979. So please be careful when you looking at this chart, because we might see some sort of the movement to the downside towards the 50% moving average. There you go. Local next local high and technical resistance 1.2935, still below the 50 periods moving average. Momentum, as you can see, still negative, still below the level of 50. It looks like the technical support at 1.29 2862 is being tested very 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 often, and that's a solid test. Nevertheless, there's nothing going on here on this chart in terms of the breakout or some kind of a momentum movement again, so possibly this situation here might last for a little bit. US dollar to the Japanese yen. What is going on here? As you can see, we got our perfect range. We've been talking about it for the last week as well. We got our perfect range coming down in impulsive fashion from the 161.96 swing high and yearly high. So this situation here is still really negative because momentum cannot even break above the level of 50. It's being capped at the level of 50, so it moves lower every time it hits this level, and it looks like the local high at 154.75 might be the last the last swing high that we've seen for today, and the market will basically be pushed lower towards the swing lows at 151.95. This is the low from the July 25th 2024. So it looks like the market is under the bearish pressure. If we zoom out to see the perspective, you can clearly see that this movement to the downside is way bigger than even that one, and that's a Bank of Japan intervention. So the market reaction for the movement to the downside and the new high made at 161.96 is way bigger than the Bank of Japan intervention, which means that this movement to the downside might be considered as the beginning of the new cycle down, possibly some bigger correction. And let's take a look at the Bitcoin. What is Bitcoin doing? And this is exactly what we wanted to see after the A, B, and C correction. I hope that you remember that from the lows here, we managed to label 5 ways to the upside with a top at 68,504. Then A, B, C to the downside towards the previous wave 4 area at the level of 63,401. Since then, we have a breakout above this local trend line, new local high, test of the breakout, a little bit of the consolidation, and today we are heading towards $70,000. Of course, this is the key level right now. As you can see, my arrow points out again. That's the key zone these days. You can remove these 2 lines because they are not relevant anymore. This one is still okay, so we will change it for the technical support, and now we are narrowing the technical resistance 70,000, and then we got 70,982. If you want to zoom out, you can zoom out, and you can see that we are very close to the area where the basically yearly highs are placed. You can see it here. We are in the area. The yearly high is roughly around the level of 73,750, so it's not that far away right now. The market is not that far away from the yearly high. I don't think this will be useful anymore. I don't think that this line will be useful anymore, so let me get rid of it. And this is the big zone. This is the big zone, the big supply zone that might be tested very soon. As you can see, the market keeps moving higher, despite the fact that the last 2 days were slightly bearish. Please remember. Today, this week, we will have the weekly close, of course, and we have the monthly close. So please take a look at the larger time frame charts to see the signals on these charts as well. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.